Good afternoon, folks. Welcome to TopGunStockTrading.com. We're neither bulls nor bears. We just want to be on the right side of the trade. This video is for Friday, January 17th, 2014. Let's get right into the action, folks. Hey, today on the Spider looks like it had a late day sell-off there. Afternoon, down 78 cents for the SPYs. The IWM, or the Russell 2000, was down about 4 points, the IWM 41 cents, and then the Dow Jones was up 42. So we had basically a mixed market with the NASDAQ was down as well. So what looks like is happening is they got the risk, some of the institutions and traders were taking some of their risk bets off and adding to the Dow Jones. Anytime you have the Dow Jones up and the other three indices down, especially the Russell and the NASDAQ, those are more riskier indexes. Not necessarily too much risk, but you have the technology names, you have the small business in America in those two indices. So obviously those portend more growth, thus more upside, more chance for upside, therefore obviously more chance for downside too. So they're a little bit more riskier than your old school Dow Jones industrial stocks that have that pay dividends and they're more stable, like your Coca-Colas and your 3Ms and stocks like that. Your traditional, your grandfather's stocks that he hid under the mattress there for years and years, and you only found them until recently. So anytime you have a split market like that, especially that type of a split, it's usually the traders taking, institutions taking the risks off here. Let's take a look at the 10-minute chart, and I'll tell you what I mean by the market, or the S&P pretty much was weak from 12 o'clock on. As I scroll back in here, you can see each day, each dotted line is 1 day of action. Each one of these candles is 10-minute. I'm on a 10-minute chart here, so kind of it shows or portrays each 10-minute period. And this is the kind of chart you use for day trading if you're scalping day trades, large position size, you're in and out. I don't do too much scalping myself. Frankly, I don't have much time for it, and I think it's a little bit more riskier, if you will. So I don't do too much of it. Sometimes I'll see a trade, I'll do it, but not always. So here we are at 12.20, I think was the high in the market there, and then from the rest of the day, just weakness the whole day. There's a couple like a candle, the next to last candle was had some strength in it, but usually on a Friday afternoon with light volume, this market floats up. Today on this Friday, it was some weakness came into the market, and that tells me traders don't want to be in the market over the weekend. They just don't want to be exposed to that risk, and they see that the risk in the market is to the downside. So that could tell us something going forward. I said in the last couple of videos since last week that this week we see some weakness come into the market. We did see a strong sell on Monday. It recovered Tuesday, and just kind of a slow float down for Wednesday, Thursday, and Friday. So one could say that this is just setting up for a move higher. I would argue otherwise, but only the tape will tell and time will tell into next week. So that's my take on the market there. Let's go transition to the USO. I'll talk about the few trades I put out today on the Facebook page, as well as on the traders forum on the website. But wait, let's do the USO here. Oil didn't do much today, up 4 cents for the USO. Again, this is a consolidation phase. Lots of resistance here, about 34.28, and even more resistance here when you pierce 35.29. I don't think there's a trade here, just kind of consolidation. Yeah, basically you got support and resistance lines down here at 33, and you got resistance, some pretty significant resistance, I believe, up here around 34.28. All right, so you're basically trading in between those two. The minor resistance into these moving averages there. I'll probably get a good 1 to 2 day pullback there when it gets there, but otherwise there's no trade for USO. Hey, moving on to gold. I did get out that article on my feeling on gold being having a bottom put into this into the gold market. Gold was up another 1% today, or 1.14, at least on the gold ETF, the GLD. I'm just trying to get a pattern here so I can get into a trade. I think this gold is going to go a lot higher throughout 2014. But until I get a pattern, I can't really just jump in the trade willy-nilly without getting into my entry price. So what I mean by pattern, you can see it moved up right here and kind of consolidated down, 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 hit that moving average. That would have been a nice trade. I was waiting for the 116 level and never got to my point, my entry price, and then it bounced up. You see it move down, a couple days down, and it bounced up again. So no real entry points that I could see in those two moves, so we'll just wait patiently on the sideline until gold gives us a signal, a pattern, and an entry price to get in there. All right, let's move on to some stocks. We'll first start off with dry ships. Dry ships was a little weak today, and that's just because the overall market was weak. I'm still in this trade, down 17 cents. I'm still in the money here. I've set a break-even stop. We talked about this last night, so this trade is going to be at least profitable for me. At least get dinner for the evening, at the very least, with commission there. So no big deal. It's a no stress trade, and that's the kind of trades I like. I like to see this thing consolidate here for a push up, but we'll see what it does. Another trade I put out via Facebook and the traders forum on the website was CNDO. I bought this, I believe, 2 days ago. You see it got a nice little pop today towards the end of the day. I'm on a daily chart here. We talked about this move up. Bullish move, sideways consolidation into the moving average produces a pretty good move. It popped today, got as high as 319. I sold half of my position at 304. I got the other half as a break-even stop. So 13% profit on that first half. Just looking to get out of the second half a little higher here. Obviously, I have a break-even stop on that second half. Another profitable trade at TopGunStockTrading.com. Another trade we got into 2 days ago was ARIA. It's another pharmaceutical, another small cap. Nice move today. It too gapped higher and kind of was weak for the rest of the day. I'm still in this trade. I didn't sell any of it yet. Again, same type of pattern as CNDO. Large upwards move, sideways consolidation. That moving average comes right into price action, produces a pretty big pop. Piece of cake, right? I haven't sold any of my position on this one yet. Hopefully I can get another big pop. I'm looking for this thing to go a lot higher, possibly to $9 here at the 100-day moving average. We'll see how it goes. Right now, I have a break-even stop on this one as well, so another guaranteed at least break-even trade, no stress at all involved in that trade. All right, let's take a look at Apple. This is a trade I did not get into, I believe 2 days ago. I wanted to, 2 days ago, back on Wednesday. I put this alert out again via the traders forum. If the Apple got to 561.28, as you see at the top of my screen here, here's the highs, the date, the open, the high, the low, the close of each day. So if I go over here to the day I'm talking about on Wednesday, you can see it got as high as 560.20. So $1 away from my entry for a short. Today it sold off pretty good, down 13.5 points, down to 540. What a move what a trade that would have been had I got my entry there. So $1 away on a $550 stock. That's that's pretty darn close if you ask me. Just percentage-wise, how close you nail the entry to a stock. So there's no trade on this anymore. There's no short trade. Obviously, it's already down. We don't chase here at TopGunStockTrading.com, so we nail our entry price, or we don't get in the trade at all. And what that does is that keeps you out of a lot of trades, a lot of bad trades. If it doesn't hit your entry price, you wash, rinse, and repeat. Go off and try to find the next trade here. I do have some support down here at 532 again, 21. This is a support level that I was going to buy last week. I didn't put my trade in, so it's as good as if I didn't ever put it out there. I didn't put it out to you guys. I didn't feel that it was a 70-80% success rate. Turns out it was a pretty good 3-bar surge into that resistance level. Oh well. Will this be a support level anymore? It might be minor support. We'll see how it acts. Usually, this will be the third hit of that support level, so we'll see how it acts. I'm not buying this level anymore. I'm going to look lower. And my buy for Apple's all the way down here at 490.54 if it can get there. If it gets that far down, it's a no-brainer, stone-cold long at that price at 490.54 Apple. Is it going to get there next week? Probably not. Maybe 2 weeks, maybe. Who knows? But if it gets there at the right pattern, stone-cold long on buy on Apple. FDX I've been talking about for the last 2 weeks. Told you I was going to hold into this. It was showing me some weakness based on this pattern, and the last 3 days it's moved down. It closed today at 140.51, down $1.30. So this trade, I had a vertical call spread on this equity here that expired today. Yesterday I was even Steven. Today I'm definitely in the money there, a couple $100. So it was a nice trade. And the reason why I kept that is because of this pattern. Now, your normal investor sees a stock, doesn't really go off of these charts. He sees a stock start here at 139.34, and for the next 6 days, 7 days, it moves up as high as 143.14. You may get panic, and emotion may come into your trade, and you may decide to sell thinking it's never going to stop going up. Well, here at TopGunStockTrading.com, we know this pattern. We see the weakness in this pattern, and we be patient. We are patient. Sorry, excuse me for the English. We are patient on that trade, knowing that pattern has the most likely chance of playing out. So that's what we did. We held on to it. A profitable trade for FedEx. Now, what's the next move in FedEx? We'll see. If it continues on, look at the weekly pattern, see what that FedEx is looking like. So it could be a short. You can re-short it in the near future if it gives you a pattern. But right now it's just consolidating right there. It has moved somewhat down. To be honest with you, as long as it stays within this red bar here, it's showing weakness. If it ever closes above this red bar high of $143, then I would get out of that trade. But as of right now, you could probably re-short this thing at 142.50, somewhere around those ranges, and you'd have a stop of 143. So you have a 50-cent stop. That'd be confirmation above that. 50-cent stop on a $143 stock. That's a pretty tight stop. You know when you're wrong, and that should produce a profitable trade. Otherwise, you stop out with very minor losses if it moves against you. Boeing today. Didn't do much, up 25 cents. One thing I want to add here, I talked about the game playing. One of the articles I wrote how the institutions do this game playing, and the whole stock market is a transfer in wealth, and it's one big scheme, if you ask me, where the institutions are taking the little guy's money. And here's one of my reasons. You look at all these big names. Today was options expiration date. Okay, so the third Friday of every month, the options expire. The monthly options expire. All right, so today was the third Friday of the month, and that's why you see these dotted lines approximately every 4 to 5 weeks. There's a dotted line that just cues me in on when the options expire. But you see these big name stocks, right? Boeing closed at $140 or close to $140. Apple closed at close to $540, near a nice round even number. Amazon close to $400, nice round even number. Google, $11.50, round number. Now these options strike prices are on even numbers. There's no option that has a decimal point in it for the cents, for the tens and hundreds spot and the price. They're all even numbers. So if you're a bank or an institution, you sell these options. You're the market maker in these options. And they of course have algorithms. They know how many options they've sold, what strike price, and when they expire. And these algorithms, these computers, can figure out what price of the equity will maximize their profits. And then they drive these prices, especially this week. Options expiration week is the real shark week. Nat Geo doesn't have anything on the options expiration week. The real shark week. So these institutions play these games and drive these prices either up or down to a price such that they are the most profitable. It maximizes the bank's profit, or if it's really extreme, minimize their losses. So you can see this illustrates this game plan that these institutions have. So you got to be careful, and if you're faint of heart, you might just be better just to stay out of this week when you're trading. Just don't even trade this week because it's so much institutional game plan, and they'll whip you out of trades left and right, if you will. So those are the stocks that the big ones, and the list goes on and on. Baidu, take a look at Baidu, see where that closed, 170 almost on the penny. How about Goldman Sachs? Some of these stocks I haven't even looked at. 176. So that one not so much on the money there. J.P. Morgan, the probably one of the larger banks in America there, 58 bucks. So you got to think, you know, the market's manipulated is my point on that. So you got to be careful. You got to read the charts, be a technical trader. Have you noticed on any of these videos, I have never mentioned price to earnings ratio, or fundamentals, or earnings, or beta, or whatever kind of fundamental statistics you can get. The PE to growth ratio, or all these other nonsense that these people put out. It doesn't really matter. It's all technical trading, and the media will make up the news to fit the moves in the market. So if the market goes down, the media is going to run a story on why it went down. It could be not even half true, but they need a story to tell the public of why the market went down. That's what sells news, that sells commercials, that sells, it gets people viewership. So they need to make money based on they sell advertising. All right, let's continue on. Enough of my my rant and rave. Yahoo still weak. A little bit today, 33 cents, 80.82. This closed below this green bar. So you had a surge here on the 14th this week. Let's see, when was that? Tuesday. Green bar, inside green bar action is bullish. It closed below that green bar low by 3 cents, not by much, but it did close below it. And that's a technical close below that green bar, so that indicates weakness on this equity. Now, granted, Yahoo is above all the moving averages. Moving averages are widening there, so there's still it's still a solid equity, but it's starting to show a little bit of weakness here at the top of its move here, and you can see it just made an all-time high last week of 41.72. I am short this equity just based on the price action here at the top of this move here. So, and some other proprietary techniques we teach at TopGunStockTrading.com. Okay, one trade I did get into today, the IBB, or the Biotechnology ETF. I shorted this stock at 248 bucks. All right. So I posted that on the Fox 3 alerts as well as the Traders Forum. 248 bucks is where I got a short off on this today. This is a topping tail with higher than average volume, I would say. Just barely, higher than average volume. A topping tail, this type of formation on a candlestick where it's got a large wick, large range, and it closes near the top or the bottom of the wick. And there's some other requirements there to call it a topping tail. But this is an indication that the equity has maybe put in a pivot point, if you will. So this could be a pivot, and that's what we're looking for. You notice it's a doji, so it closed basically where it opened. I believe opened 247.43. Yeah, closed right to the penny of where it opened today. So that's a doji with a large wick, topping tail there. It lends itself to being a pivot point. We'll see how that acts going forward. But I am short the IBB, or the Biotech ETF. Alright folks, I wanted to get this video out early this afternoon. It's a Friday afternoon. I hope you guys enjoy your weekend, and we'll see you on the charts on Monday. I could put out a video Sunday afternoon. I'll go through scan some charts here, and see if I can't find some trade setups for us for next week. Alright folks, have a good weekend.